Okay, just some footage of me down at Margs in the younger days. Nice left-hand break. I think that's what the market's coming into. A bit of a drop and right into it, into the tube. Okay, so welcome to the public daily investment show. Go through ASX US indices, sub-indices and commodity prices, looking places to invest. So we start off with us. So ASX 300. So we held up pretty well, only down 0.5% today. I can't help but think we're going to come and retest this low here. So the two big sectors. So the financials holding in quite well. I guess that's the net interest margins with higher interest rates being priced in. So really no panic there, as opposed to US banks. They're more financial. We'll have a look at them. The materials. So materials are having a bit of a wobble at the moment. If they can't hold this 20 weekly, we could be in for a bit more move down. So can't do a buy on materials just yet. Long term fine. Be a good buying up coming up. However, energy sector is still where you want to be. We'll have a look at oil prices a bit later on. So energy sector still looking good. If we look at the energy sector over the ASX 300. So again, so you want to be in energy. Okay, the gold sector getting a bit of a. I think we're in for a bit of a. So I've got a targeted move down here for our gold sector. A bit more, a bit of an A. There's a bit of an ABC correction going on in a lot of these resource stocks. Setting up for a great buying opportunity to break out of this big expanding wedge here. So that's obviously led by Northern Star, which is overweight the index. Our tech sector. So we're still sitting in the bottom there. Property sector, the REITs still look sick. Okay, over to America. So the VIX. So this is the futures VIX. So it's still elevated. So there's still risk hanging around. The S&P looks pretty like it's going to come down and test the 50 here. We'd want to hold, otherwise we're in for one of these things over here. A bounce there would reflect the sort of measured move here. So I still think there's going to be some downside. If we look at the futures at the moment, so the futures are up so far. So let's see how tonight goes. The Nasdaq. So they're not bullish candles there. So I'd say they're coming down for a test. If you look at the futures are up. Maybe something to sell into. So if you look at the Mag 7, so that's a terrible candle last week. That's not bullish at all. If you look at Nvidia still looks pretty. Doesn't look like it's going to fall over. The software sector in America. So last week, so technically still in the top half of this candle. That's the AI fear trade. Trying to work out, is it on or off, or is it off? Okay, the old private credit. The cockroaches. Hey, there's a cockroach in the kitchen. Is there something bigger going on? Apparently Google offloaded their debt into one of these instruments instead of packaging it up as part of them. Anyway, that looks pretty sick, and If we look at the financials, that looks pretty sick. The XLF. So the big boy JP Morgan, he's failed to hang on to the side of the top of the building there. BlackRock looks pretty sick. So financials aren't in good shape in America at the moment. Materials in America. So again, I've got a bit of a measured down move for materials there. So same, but and again, the XLE, the energy sector, is just going berserk. If you look at the underlying companies, the charts, they look fantastic. If we compare the energy sector to the Nasdaq, so you can see the energy sector has been outperforming tech, and I reckon we've got a targeted move up here. If you're new, join the channel. $10 a month. ASX US shares, ETFs. Anyway, so global gold miners. I think we've got another retest down again before a very good buying opportunity for the gold miners. Okay, the mid caps in America don't look good, so they're not going to add any value to the S&P. Israel looks fine. That's because they're led by this guy here, Elbit, defence contractor. That's their biggest holding. Dubai is not looking to keep your checkbook away. Dubai property, Dubai real estate market. It looks pretty sick. It's not painting a good picture for that whole situation over there. Japan's holding up quite well for a country who relies on imports of energy, as opposed to India, who rely on it too and have been hammered. But there's stock markets approaching support. If you didn't know, you can actually buy this one in like your member direct, your Australian super thing. Okay, China. Okay, so China's trying to put in a bit of a bottom. So emerging markets overall looks pretty neutral. Your high growth super fund, so it's not doing very much. So you'd want to have an energy bent in your super fund. You'd be outperforming. Just a little update on the model portfolio. So we got our member direct portfolio. We're up 45% last year, and this year we're 11%. So we're having this pullback. Again, a good buying up. We got the RERP, which was up 86% last year, and we're up 2% this year. So we're having, this one's got the US, a lot of US gold, silver. So they're going to have their pullback, but a nice flag forming. And then we got the RRTP, which is just ASX listed ETFs. So that was up 55% last year, and we're 6% year to date. So again, coming down to support. VGS. So they're on a, well, that's probably, I should fix that. So they've broken through that support there. A bit of an A, B, C going on there. Again, if you say an energy focus as opposed to VGS, should be doing pretty. Okay, interest rates. Okay, Aussie interest rates going up. Aussie 5-year rates going up. So anything in the bonds, so this is your VAF, bonds ETF. So that bonds are gonna correct with higher interest rates. US 1-year rates. They can't help but thinking rates are going up globally. US 5-year rates, so they look more bullish than bearish. So that's flowing through to the US dollar. So it's interesting, we are on some measured moves here. We've got two, as this being a top on the US dollar, so a breakthrough would be quite bullish for it. So we've got to wait a couple of days. So that's been negative for the gold, precious metals. So the Aussie dollar. So obviously that's still working out what's going on. The Bible. So the Bloomberg Commodity Index, about to take out the highs here. That's basically where we're invested on the channel. The gold price. So we're fallen below this little pennant here. I reckon. Oh, well, I've got a target move for a move down here before ripping off. So same for Aussie dollar gold, and so I think this is the gold miners over the gold price. So I think a bit of weakness in those gold miners will set up a good buying up. Okay, the girlfriend silver. So she's not. So I've got a little bit of another move down for silver. If we look at silver in China is $91. So there's still a premium of $11. Platinum's just chilling. Palladium chilling. Copper just chilling. Okay, oil is extremely bullish. That's not a sell. That's about as bullish as you can get. The break of 120 is going to make it rip. I don't see that situation over there being sorted. Hopefully you backed up the truck on energy stocks. If we look at US oil over gold, so if it's interesting, the long-term one, this one. So this is basically where you wanted to sell oil and buy gold, and then here you want to be buying oil and selling gold. Not that you should sell gold, but that's just the relationship. So it's broken out. So oil is the new gold. So what we're looking at here is the December oil price. So what the market thinks. So the market thinks. So it's going higher. We're not dropping. So the market's saying in 12 months' time, oil's going to be $76. And we're at highs. So yeah, there's going to be no crash in the oil price. Natural gas in America. So that's doing nothing. That's because there's plenty of it over there. Natural gas in Asia is going berserk. So you want to be not. A lot of our companies sell gas into our local pricing, which is doing not much at all. So you want to be exposed to companies that are selling into the Asian gas price. So European gas prices have cooled off a bit, and UK gas prices still elevated. Okay, iron ore. So iron ore's still at the top of the range there. Lithium. So continuing, it's on its way up to the old highs. Maybe still looks bullish. Spot uranium chilling. So thermal coal. So still, so obviously as oil, the bias is still up for thermal coal, being that replacement for electricity. Coking coal, not as strong. Nickel, so nickel's still trading in the little pennant there. Obviously the bias is to break to the upside. Aluminium looks pretty strong. Manganese. Okay, food. So soybeans. Soybeans been a great trade. Soybeans. Corn about to break out. Wheat. Nice little candle last week. So wheat prices going up. Buy your cornflakes now. Sugar cane. So yet to break out. And we'll just finish on a few hogs. So the hogs are getting a bit cheaper. So stock up on hogs before you it breaks out. All right, if you like that, give us a like. Otherwise, join the channel. I'll see you tomorrow.